It's about that time of day again. Welcome back to your nightly newsletter, boys and girls. Joseph James here. Wednesday evening, October 21st, 2015. Cruising our way through the week here. Hope you're having a great week right along with us. In tonight's newsletter, crude oil is bearish after today's inventory report, and we have two spiking channels in today's session. We know the best selling opportunities now are going to come after staying patient after a measured correction higher. We get a plan for the black gold for all you crude traders. How about the E-mini S&P? Bearish with an overshoot at major channel lows, which tell us the best selling opportunities will come up at the highs. We're looking for a measured correction on the S&P to get selling again for tomorrow. How about the gold? The yellow metal is bearish this evening after breaking free of this morning's trading range. Boy, that thing really fell out of bed, didn't it? Our plan is to wait on the gold for the measured correction, and then we're going to use those buyer failures around those range lows, possibly channel highs tomorrow on gold. We'll take a look at that gold chart in just a couple moments. And of course, the euro, the 6E is range bound and sideways, but today's undershoot of that range high combined with a new potential bear channel tells us the bias is quickly shifting to the sell side ahead of the ECB meeting on Thursday. We got plans for crude, S&P, gold, and euro. But you know how we roll here on the nightly newsletter. Before we jump into our charts here this evening, I do want to remind you to make sure you're watching this video on our trading blog here at sidewaysmarkets.com. If you're watching the video on our YouTube channel, there's a link right in the description of the video. That'll take you over to our trading blog. A couple of reasons here. First of all, you can grab a free pass, come out and test drive our live trade room as a guest. If you're not a member here at School of Trade and you'd like to get a free pass, grab that free pass, upper left-hand corner. Lower left-hand corner, I have a spot to register for our nightly newsletter mailing list. All I need is your name, your email address, and then make sure you check your inbox. I'm going to send you a verification email. That way I can keep sending you these emails every evening for our nightly newsletter. Right below the video tonight, you'll see a spot to download all of the charts, yes, all of them, and have them ready for your use tomorrow's session. And over on the right-hand side, you can register as a new trial member. It's not the same as our free pass. I can guarantee you're going to learn more by joining our free trial in 1 week than you will anywhere else on the interwebs. You can also learn about what it feels to be a member, what it means to be a member there on the right-hand side. And don't forget, I've always got someone standing by 24/7, 365 to give you guys a hand. Are we ready to rock and roll? I hope you guys had a great Wednesday, hump day here. We're going to the latter half of the week here. We got ECB tomorrow. We're going to continue to hear more out of this secret covert OPEC meeting that I still don't know if it really happened today. We'll see. We'll see. You know me, though. I'm always going to trade the chart. I really don't care what else is supposedly going on there out there in the reality. Reality has nothing to do with day trading, let's be honest, right? It's all hidden inside these candlesticks. Let's dig in. Crude oil is bearish this evening after today's inventory report. That's two spiking channels in today's session. Yeah, we know the best selling opportunities will be after a measured correction higher. We can see this long-term bear channel and some easy swing highs overhead to use as resistance. And our best option is to wait for the buyers to fail after the correction higher before getting short on the next leg down. It's very easy to see this market is bearish, and that, I think, is what concerns me so much. I think that's what makes it so concerning for tomorrow. There are really, 3, 4 really big important pieces to this puzzle. First of all, you can see the volume profile on the left-hand side. Definitely weighted to the downside. That means you can expect this price to want to dig into these highs before coming right back down. The second piece of this puzzle that I see here tonight is going to be this major bear channel. Now, this major bear channel, I have to say, looks like garbage. And we're likely here, if it just shoots up, it's going to give us an undershoot of that high. And so we're going to expect a little bit deeper push up to possibly 45, 50 area, 46, right? So if we don't make the full channel rotation lower, if we just take off to the upside right now, then that's going to be a monster undershoot of that low, and that means you can pretty much expect to get an overshoot somewhere around, again, dare I say 46, right? Flirting with that high of day from today. And then, of course, the third piece of this puzzle here is going to be spike and channel. Spiking channel down, that got the day going today. We saw that in the U.S. morning session. And then just like a good spiking channel should, it corrects right back to the beginning of the channel. Clockwork, right? I mean, I should say textbook spiking channel all the way up. And then, of course, they can't hold the moving average, and this thing tumbles right back down as if we didn't see that coming. And that goes again into another spiking channel. So there's really no question about what direction this market is kind of hinged to right now. The only thing I gotta say, it can't be this easy. It can't be this easy, right? Whatever you do though, unless we finish this rotation down to that channel and then come back up, be very, very suspicious of this area right here. This is just begging to be a trap. I'm going to be looking for buyer failure as we go higher here. I don't think they're going to make it that easy, but I tend to get a headache when I think too much, right? I tend to overthink this stuff as a human being. It's best just to trade the chart. So what I'll be watching for here is as we go up, I'm looking for buyers to fail, right? Always wait for proof. I don't want to get into those nasty emails saying, I lost all my money because there was a red box right there and I just sell. Didn't you say so? No, wait for proof. If you don't know what proof looks like, yeah, I'm talking to you. I'm talking to you. Wait for proof before you pull the trigger, and don't be risking money you can't afford to lose on this stuff. I got a couple emails about that last week. Guys, wait for proof. If you don't know what proof looks like, okay, make sure you get educated before you go risking your real profit and use a proven strategy. But again, if we don't go down to that low before we go higher here, boy, again, it's too easy right now. This is one of those times when I look at this chart and I go, all right, it's going to have to be a little more difficult than just sell these red boxes. So again, I got a measured move going back higher here. We got an ABCD measured move target back down. Got some definite support down here. And again, this is going to be channel rotation. So we're expecting channel rotation from top to bottom, bottom to top, top to bottom. We want to sell the highs. If they can't get to that bottom, though, that's going to give you the sign here now to definitely wait for a little bit deeper correction. How deep will it go? I'm glad you asked. We'll be looking for a measured correction back up and then buyer failure at those resistance areas overhead. There's no way for me to tell you right now how far up this is likely to go, other than I know one thing is for sure. I know that if we don't end up tomorrow morning down around that low, then that's going to be an undershoot of that low, and we'll definitely expect it to be a little bit deeper correction before this price finds its way down. Don't forget, if you're going to be a buyer during this correction, the best way to do it is seller failure, right? So if you want to buy this correction, and you're going to get a measured correction, the question is how low will it go, right, when we get that measured correction, all right? If we go all the way down to those lows here in the overnight session, then we start correcting back higher, then you're looking for that sell right back up around the high of that channel. If we don't make the full rotation down, then that measured correction puts us a little bit higher. And again, if I had to guess right now, I would guess we're somewhere, again, from what I see right now, I would guess we're somewhere around that 45.80 to 46 even area, right, before we make the next plunge back down, unless, of course, we finish that rotation all the way back down, and then we'll have a much easier job buying that thing on the way back up tomorrow, and then probably late tomorrow morning, early tomorrow afternoon, we'll be looking for that that sell-off. Again, wait for proof. My objective tomorrow is going to be waiting for buyer failure after that correction. That's where you're going to get the easy money out of this market here tomorrow. And don't forget, Trade Room opens up tomorrow morning at 8 a.m. I would love to see you out there with me. How about the S&P? The S&P 500, is bearish with an overshoot at channel lows, which tells us the best selling opportunities are going to come up at the highs of the channel tomorrow, most likely even a little bit higher than the highs, right? That overshoot area here. We can see the overshoot at the channel lows. Let's get this marked up here right now. We can see the overshoot at that channel lows. Again, you can see the overshoot marked up at that channel high. So this is kind of the opposite of what we just talked about on crude oil, right? Where crude oil was threatening to have an undershoot. Now these sellers are, they're dipping into the old cookie jar a little bit too much. Again, they'll take some profit here. Buyers will come in. most likely overshoot that high here now. Again, look for that measured correction and then buyer failure up at these highs for the best opportunity to get short. Looking at the volume profile right now, we can definitely see a very balanced and well-distributed volume profile. But I mean, you got to look at it though in terms of that's where the most amount of volume was right now. So we draw that over and you're right about that 2024 area. So it looks like it's lining up nicely right now. The only scenario that we really got to worry about for tomorrow on the S&P is if this thing just continues to collapse down, right? If it does continue to collapse down, you'll have to be patient. We've got a measured move down here, right? A couple measured moves here that are still waiting to get hit here right now. So we may see another leg lower here, but the reality is no matter how low we go right now, we are well oversold. You can buy during the correction. Just remember, though, buying that correction, you will be playing against the trend on that. So if you're going to be a buyer on the S&P right now, I personally would wait for seller failure to buy right into those stop losses. That way you can get a little bit easier money out of it and then hold it up to those highs and then back up to these highs here, buyer failure at the highs, right? Or you can wait for it to make the turn and then sell those rips right back on down. So we know we're looking for measured corrections back off these lows. Channel rotation, right? That's the name of the game right now in these trending markets. So we definitely, again, you really got two options right now. Same thing on crude. You can buy the correction, just be careful buying the correction. You're going against a trend, or stay patient for the correction to occur, and then of course buyer failure up at the highs to sell that sucker right back down. This is another market we'll be watching tomorrow morning in our chat room here at School of Trade. Don't forget to come out and see us. Now, the euro. How about this euro, the 6E? We're talking about the currency futures, right? I like to trade futures because they're a real market, right? They give me leverage, transparency. There's a buyer for every seller. And the reason why I trade futures is because it's a much lower cost per transaction. I realize that Forex allows us to get in with smaller amounts of money in our account, but guys, when was the last time doing the bare minimum was ever a good idea, right? The next time you think about funding an account with $200 for a Forex broker, just think about it for a second, right? You really don't want to be doing the bare minimum. And the problem is that the ratio of cost to the benefit of it is just ridiculous, right? If you're paying 3 to 5 pips on every trade, that's between $30 and $50 on the spread. Why would you pay $30 when you could pay $5 to trade futures? It baffles me. Again, really the only reason why you would trade Forex is if you want those little micro lots. But the problem is the Forex brokers, they squeeze all your profit out if you trade micro lots because the transaction costs are so high. The spreads are so wide, right? Just make sure you read the fine print if you're going to be trading the old Forex markets. It's great for long-term traders. It's great for large accounts. It's great for currency hedges, but boy, oh boy, I'll tell you, for the average day trader, those micro accounts that they offer for Forex traders, they're just they're strategically priced. And can you guess who they're priced in favor of? The broker, right? Of course they are. That's the bad thing about Forex, right? The brokers don't have the same incentives that we have here in the futures industry. Anyways, enough about that. The euro is range bound and sideways, but today's undershoot of that range high, combined with, you see, I got this little channel. I see you. See what I did right there? I got that little bearish channel going in. As you can see, range undershoot. Right now, why is that an undershoot? Well, because remember, these trading ranges, and by the way, this is the same range from yesterday, by the way, we should expect the price to rotate. Why aren't we rotating here, bulls, right? Where are we right now? That's a range undershoot. Now, that range undershoot definitely is not bullish. I'll tell you that much, right? It's one of two bearish clues. And then here's what we call an unproven channel. Now, I'm not sure how much I want to call this a phantom channel because it really is well behaved. You can see that midline really well behaved here. The lows are really well behaved. The problem I have right now, though, is, again, this is a range-bound market. So this is borderline phantom channel here. So I'm definitely not going to try to sell the high of that channel right now. I'm going to use that channel combined with, and you know what, to be honest with you, I think the channel is minor compared to the range undershoot. That range undershoot really tells you a story right now. Think about what should happen right now, and then think about what did happen. What should happen was rotating from low to high, high to low, but hey, we're not seeing that rotation right now. So that's the first clue. The second thing, of course, is this channel. It definitely helps to organize these candlesticks. When you put the channel on there, all of a sudden you go, oh yeah, this is a little bit bearish, isn't it, right? All of a sudden it kind of fits into that mold. And then, the volume profile doesn't look very bearish, but, it definitely looks like we have more volume towards the lows there right now. I don't think that's the most important clue. I think the range undershoot is going to be the most important clue. Now, really, the hard part for tomorrow is you got Draghi hitting the microphone tomorrow morning about 8:30, between 8:30 and 9 o'clock. You know our boy Draghi. He likes to be spontaneous, so it'll probably be somewhere between 8:30 and 9:30 tomorrow morning. You'll hear the announcement at 8:30, and then you'll see the old dog and pony show afterwards. I had mistakenly told you guys it was today, and I appreciate you guys correcting me on that. So tomorrow, the ECB announcement, we can assume that's what's causing this market to go sideways right now. So right now, the plan is going to be to fade the highs, right? Fade the highs, fade the highs, fade the highs. At this point now, all we know for a fact right now is we have a balanced market with a bearish tone to it ahead of tomorrow's major news. So scenario one, price jumps up ahead of the news tomorrow or after the news, wait for the buyer failure. And when I say fade, what I mean is I'm waiting for price to go up, and then as it pulls back, I'm waiting to sell it into the stop losses of those buyers, right? Fade the highs of the move, fade the highs of the range, fade the range expansions. The hardest part's going to be staying patient on that right now. And then what if we take off the downside? If we take off the downside, I definitely need to see channel rotation. The hard part is going to be, again, if we take off the downside without going higher first, then you're going to want to see rotation down to that channel low. If you don't see rotation down to that channel low, remember, think about it. If we rotate down to the low of that channel, then we're going to be a lot more confident to sell the high of that channel, right? Using the appropriate sell trigger. Remember, wait for proof. Don't just guess out there, and don't risk real money you can't afford to lose out there, kids. Okay, if we don't rotate all the way down, now just like the S&P, that gives us an undershoot of that channel low. And again, that's where you want to really stay patient, wait for that price to jump up, wait for the buyers to fail, and sell that high. A real simple strategy for tomorrow on the euro: keep looking short, use the range, and trade around Monsieur Draghi tomorrow, all right? Make sure you guys don't get too greedy. Don't get too aggressive tomorrow around the ECB announcement. And then, boy, here's a slippery sucker right now. The gold, the yellow metal, is bearish this evening after breaking free of this morning's trading range. Our plan is to wait for the measured correction, followed by buyer failures around the range lows and the channel highs tomorrow. This market really, quote unquote, fell out of bed today, which tells us that most sellers probably missed this move, and they'll be waiting for the next opportunity to get short somewhere around the highs of the channel or the original trading range. If I had to guess right now, guys, this is one of those situations where we start the day completely range bound and then just, whoops, fell right out of bed. Slippery sucker. What that tells me is that this probably caught a lot of bears off guard, right? Because no bears are going to sell that low, at least not the experienced bears in the market right now. So that most likely now is going to require price to go a little bit higher before we get those seasoned bears, right? Those veteran bears, those bears with the big trade accounts, right? Not the little small micro trade accounts. So we definitely want to be patient for that correction. We definitely want to be patient for that measured correction going back higher. And really what you want to be looking at are two real easy areas on this chart. First of all, at the high of that channel. Honestly, I doubt it's that easy just getting up to that high. It'll probably end up pushing a little bit higher. If I had to guess right now, I would guess we go measured correction back up, see this thing dance around those lows for a little bit, and then we're looking for those buyers to fail and bring it right back down. That trading range is going to be a huge price magnet, and that's where all the sellers are going to feel like they didn't miss the boat on the way down, and they're going to feel a whole lot better about themselves getting short again. So what's the plan for tomorrow? The plan for tomorrow is definitely I'm going to be looking to sell tomorrow, but I'm looking to sell with buyer failure after a big correction. And again, I couldn't tell you where we're going to get it right now, but tomorrow morning I'll definitely be looking for clues around the channel highs. And again, if I had my choice tomorrow, it would be right up around this 1174.1 because like I said before, a lot of sellers probably either didn't get in on that or they're already in, and it's going to take a lot of move. It's going to take a couple of nice pushes higher here to entice those bears back into this thing again, and then again we'll look for channel rotation. So measured moves on the way down, we'll be using that. We'll be using channel rotations. We'll be using measured corrections as we go into this session on Thursday morning. Guys and gals, don't forget, we do this every day live in real time in our live trade room, opening up at 8 a.m. Eastern time tomorrow morning. Grab your free pass, register for the mailing list, download those charts for the mañana. And as you guys know, don't forget, if you happen to have some free time here, head over to School of Trade, register for our free trial. I take a lot of pride in the fact that you're going to learn more with me on my trial than you will anywhere else on the interwebs. And if you got some free time, don't forget, check out our 3 levels of membership, beginner, intermediate, and advanced. We have a place for everyone here at School of Trade, whether you're brand new, right, and you're wondering what is the difference between futures and Forex and stocks and what makes futures so special for us. It really is a great place to launch a new long-term trading career for short-term traders, right? And don't forget, guys, I've always got someone standing by 24/7, 365 to give you guys a hand along the way if you need any help. My name is Joseph. I hope you're having a great week out there. Boy, it feels great to be alive and kicking these days. Beautiful time of year. Markets are extra volatile right now. This is the best time of the year to be a day trader. I hope you're enjoying it. Thanks for being here. Thanks for watching. Thanks for sharing this information with a friend. And I'll see you guys tomorrow morning, 8 a.m. Our trade room is up. Tomorrow evening at 8 p.m. Eastern time for our nightly newsletter. And we'll wrap it up next week here with the Thursday newsletter. Have a great evening, guys. I'll see you in the morning. Adios, amigos. Bye-bye for now.